When you operate as a freelancer in Denmark, understanding the tax deductions and structural advantages available to you is critical to protecting your margins and building a sustainable business. And in this video we will walk through the key concepts you should know so you can approach your finances more strategically and with greater confidence. Let us start with the basic structure. Most Denmark-based freelancers operate either as sole proprietors under the business tax schemes, or through a small company such as an APS. While the optimal choice depends on your revenue, risk profile, and growth ambitions, the underlying principle is the same in both cases. Your taxable income is revenue minus legitimate business expenses, and your ability to correctly identify, document, and allocate those expenses is what ultimately drives your effective tax rate. From a deductions standpoint, the Danish system is relatively generous, provided that your costs are directly linked to generating income. Typical deductible expenses include professional equipment such as laptops, phones, cameras, software licenses, and tools that you use for your work. In many cases, you can deduct the full cost in the year of purchase, while more expensive or long-lasting assets may need to be depreciated over several years according to the rules set by the tax authorities. Maintaining clear invoices and receipts, ideally organized by category and date, is essential to defend these deductions in the event of a review by SKAT. Beyond equipment, you can typically deduct a proportional share of your internet, mobile phone, and other communication costs used for business activities, and if you work from home you may also be eligible to deduct a portion of your housing expenses. This home office deduction often hinges on whether you have a clearly defined workspace used primarily or exclusively for business. If so, you may be able to deduct a percentage of rent, utilities, and even certain maintenance costs, linked to the size or usage share of that workspace. The key is to rely on a rational and documented method for calculating that proportion, and to apply it consistently over time. Travel and transportation are another significant category. If you travel to meet clients, attend conferences, or perform work on site, you can usually deduct transport costs, whether it is public transit, taxis, or mileage for your own car, using the official kilometer rates set each year. Daily allowances, or per diems, may also be available for business trips involving overnight stays, but it is important to distinguish between what is reimbursed as a tax-free allowance and what must be documented as an expense. Similarly, costs associated with accommodation and meals on business trips are typically deductible, although personal leisure elements of travel should be carefully excluded. Professional services are fully deductible as well. Fees for accountants, bookkeepers, tax advisors, legal counsel, and relevant training or education that directly enhances your ability to perform your freelance work all usually qualify. This also includes industry-specific certifications, courses, and conferences, particularly where there is a clear link to your current business rather than a complete career shift. Marketing and business development costs are often underestimated by freelancers yet can be powerful deductions. Website hosting and development, advertising on social media, paid search, business cards, branding, and even a share of costs for content creation used for marketing your services can all be deducted, again provided there is a solid connection to your business activities. When it comes to client-related expenses, modest entertainment, such as coffee meetings or occasional meals, may be deductible within the limits accepted by Danish tax practice, but you should be conservative and well documented in this area, as personal and business motives can easily become blurred. On the tax advantage side, Denmark offers several structural choices for freelancers that can materially influence net income. For many, the business tax scheme, or virksomhedsordningen, is particularly relevant. Under this scheme, you can achieve a more company-like treatment of your freelance income, including the possibility of deducting business interest expenses more effectively and retaining profits within the business at a lower current tax rate, then drawing them out as personal income over time to smooth your tax burden. The scheme also enables more systematic separation of business and private finances, which strengthens your overall financial control. However, it comes with strict accounting and reporting requirements, so it is advisable to use a professional accountant if you opt in. Another advantage relates to pension contributions. As a freelancer, you do not have an employer setting up your pension, but you can compensate for this by making tax-deductible pension payments yourself. Depending on the type of pension product and the limits applicable in a given year, those contributions can significantly reduce your taxable personal income while building long-term financial security. Similarly, you may have access to specific schemes that allow extra deductions for certain types of savings or insurance products, including business-related insurance such as professional liability or equipment insurance, which are generally deductible operating expenses. VAT, or MOMS, is a separate but closely related topic. If your annual revenue exceeds the current registration threshold, you must register for VAT, charge it on your invoices where applicable, and remit it to the tax authorities. The advantage here is that once registered, you can deduct the VAT you pay on most business purchases, such as equipment, software, and professional services, effectively reducing your cost base. This does not change your income tax directly, but it does improve your net cost after VAT, which indirectly strengthens your profitability. Precision in your VAT records, including distinguishing between VAT deductible and non-deductible items, is critical, and many freelancers find that using accounting software integrated with invoicing tools is a practical way to maintain compliance. It is also important to acknowledge the distinction between personal and business expenses. Even in a generous system, meals at home, normal clothing, and personal subscriptions remain non-deductible, and mixing them into your accounts can create both tax and legal risk. A disciplined approach, separate bank accounts, clear documentation, and a simple monthly review of your bookkeeping goes a long way toward protecting you and preserving your deductions. Looking ahead, your strategic choices as a freelancer in Denmark should balance current tax efficiency with long-term stability. That means periodically reassessing whether you should remain a sole proprietor or transition into a company structure, reviewing your use of schemes like the business tax regime, ensuring that you are maximizing pension-related deductions, and continuously aligning your expense documentation practices with the expectations of SKAT. Before making any structural change, it is advisable to run scenarios, ideally with a tax advisor, comparing how different income levels, deduction patterns, and future growth plans play out under various models. In closing, the Danish system offers a robust set of deductions and advantages for freelancers, but it rewards those who treat their freelance activity as a real business, tracking costs diligently, staying informed about current rules and thresholds, and seeking professional advice when the complexity increases. By doing so, you not only minimize your tax burden within the boundaries of the law, but also gain greater clarity over your financial performance, which ultimately enables more confident decisions about pricing, investment, and growth.